Bank Negara Governor Tan Sri Dr. Zeti Akhtar Aziz said she does not see a need for a revision of interest rates. She said the benchmark overnight policy rate of 3.25% is still accommodative for the country's economic growth. Zeti added that credit growth in the country has been significant and is flowing to both households and businesses. Speaking at a dialogue on the revised budget 2015, the central bank chief said the Malaysian economy is still on a steady growth path. She said the revised growth forecast of 4.5 to 5.5% for 2015 is very positive considering the challenging global conditions.
All this is positive. So, of course, we will review from time to time what the risk to growth is and the risk to inflation, and we will decide on the interest rate. But I want to emphasize at this point, the interest rate is highly accommodative.
Commenting on the weakening ringgit, Zeti said the current levels of foreign exchange rate reflect temporary conditions and that the rate is expected to improve. She added that despite the ringgit's fall, Malaysia's current account surplus is healthy, while foreign direct investments continue to flow into the economy.
When you look at the capital account, every year we continue to receive foreign direct investment, and the foreign direct investment continues to be in the region of about 24 billion ringgit. And so we are still a destination for foreign direct investment. So this is, if we should ever have a deficit, we still have financing.
She said Bank Negara has taken prudent macroeconomic measures that included building up the country's foreign reserves. The reserves have declined recently, but remain above the optimal level.
We were criticized for accumulation of too much reserves, which were far in excess of those required by a country of our size. And now, of course, these reserves have become important, and they have declined by about 18 billion ringgit since 2014. US dollars since 2014. It's declined about 18.9, about 19 billion. And this is what reserves are for. That is why we built up buffers.
Bank Negara's international reserves stood at 116 billion US dollars as at the end of December 2014, from 134.9 billion US dollars a year ago. The reserves position is sufficient to finance 8.4 months of retained imports and is 1.1 times the short-term external debt. Shannon, The Edge TV.